This video and all other videos on this channel are for entertainment purposes only. The content of this video and all other videos on this channel are the opinions of the creator only and do not constitute legal, trading, investment, or financial advice of any kind. Investing carries a high level of risk and the majority of retail clients lose money. Do not invest any capital unless you understand the risks and you are prepared to lose it all. Alright, hello and welcome to Camel Finance. I'm your boy Camel and welcome to the week. Welcome to Monday. Today I wanted to talk a little bit about unemployment again because I got quite a lot of pushback after the weekend's deep dive, and essentially what I want to do is point at a few things and just get you to consider it, okay? I'm not trying to sell you this narrative. I'm not trying to convince everyone you have to sell your assets because we've got a recession. All I do is I try to do my best to figure out what's going on. And really, it's a selfish thing, right? It's a selfish thing. I do that for me so that I can stay on the right side of the trade. And I just share that with you guys. Again, I'm not pushing a narrative here. I'm not trying to convince you of anything. And if you want to believe 4.1% unemployment is the real number, that is entirely up to you. Then I want to talk a little bit about Bitcoin. MicroStrategy is probably firing a little hint of what's to come for Bitcoin, I suspect. So we're going to talk about that. And then we're going to hone in on finding these cycle lows, right? We're going to be long by Wednesday at the latest, I would think. Needless to say, if the market takes a little longer to sort itself out, I reserve the right to only focus on putting quality trades on. But as far as I can tell, everything is aligning quite nicely to get some longs on early this week. So if you're new here, please do hit that subscribe button, follow along, and you can stay updated and watch me get underneath these cycle lows and get long in real time with public stop loss levels as well. So first of all, for unemployment, okay, temporary help service jobs have declined for 23 months straight. Ignoring this, in my humble opinion, is going to be at your own peril. The number of unemployed Americans for at least 27 weeks is also rising. This number has risen by 600,000 over the last 1.5 years. Historically, we only saw it occur during recessionary periods, okay? So that's another thing. I'm just pointing at data here, okay? Again, I'm not trying to sell you this narrative. You do not have to buy this whatsoever. But now we're going to go a little bit deeper. Non-farm payrolls. We allegedly added 254,000 in September, coming after 159k in August, which was revised upward from the initial 142k, which seems like great jobs growth. This would be indicative that the economy is still going strong, everything is fine, and the labour market is nowhere near falling off of a cliff, right? But when you look under the hood, we are actually talking about recessionary non-farm payrolls. The seasonal factor in September 2024 was the highest of any September on record, so the reported non-farm payrolls of 254k is clearly far from the actual. If the seasonal factor in 24 was the same as in 23, non-farm payroll would be 145k. That's it, just 145k, which is more than 100,000 below the reported number. Keep in mind, if the seasonal factor in 2024 was the same as back in 2007 through to the 2019 average, non-farm payroll would be just 35k to the upside, okay, which would be more than 200k below the reported number. The lowest ones were negative reads between 2008 and 2010, and if the seasonal factor in 2024 was the same as back in 2008 to 2010, non-farm payroll would actually be negative 78k, which of course is indeed recessionary and in excess of 300k below the reported number. And remember, all of this is before they've actually come out and revised the numbers down. So if we were to factor in likely downward revisions, monthly and annual, we could easily be looking at close to negative 200k in September. Now stick with me because this gets even more wild. It's not just the case with non-farm payroll. ADP private payrolls showed the weakest September on record, negative 260k, whilst the SA data showed relatively strong jobs growth of 143k. So why do we see such a big divergence between SA and NSA data? You will have some people saying it's a problem with the way they collect the data. I see that in my comments. I also see other people saying it's because they're fudging the data ahead of the elections. But the actual reason is probably way less exciting. BLS is having problems after the lockdowns and related measures like helicopter money in 2020 and 2021, which messed up the economy. So it's going to take a while for them to adjust their SA models. Once they do, many people are likely going to be in for a big negative surprise regarding the labour markets. Take a look at the hard right edge here, okay? Again, I make the case. It's not quite as simple as it seems. Now stick with me, okay? Because it's the unemployment data where things start to get really, really crazy. We also saw average work week tick down to just 34.2 hours, which are at recessionary levels, the same as 2008 and August 2020. Okay, hard right edge here, same as 2020 and same as the GFC levels. Unemployment rate ticked down to 4.1%, allegedly. That's what they reported, which caused many investors to sit here and say, that's an all clear sign for the labour market. We will be avoiding a recession. We are going to have a soft landing. But if you know where to look, it's really hard to say anything like that because it wouldn't be the first and certainly not the last time the unemployment rate went down a bit after the recession started. And the unemployment rate was more than plus 0.8 percentage points above its cycle low in the prior 2 months, which has never happened on record without the economy already being in a recession. So when we dig into the unemployed people household survey, we can see that 700 285k jobs were added in September by the government, and that's the second highest on record. And of course, we can make the argument that maybe some of the government workers were temporarily employed due to the elections, but this should have been net neutral for the SA data, and it isn't. If we were to see the same average of added government workers as the first 8 months, the unemployment rate would be 4.5%, which is the case I was making on the weekend's deep dive, which is a whole heap above the 4.1% that got reported. So just like non-farm payroll, unemployment rate is also a lot worse than they are letting on. So let's have a quick recap here. 250k non-farm payroll, which could easily, with the same NSA data, turn out to be closer to negative 200k when the BLS adjusts it for seasonal factors and when all the revisions are done, both monthly and annually, is nowhere near the number that they are letting on and is significantly worse than they are letting on. The 4.1% for unemployment rate, which was lower solely due to government jobs, and without them would have been 4.5%, again starts to trigger a whole heap of red flags and alarm bells. If people were looking closely at the negative 200k and 4.5%, which is probably much closer to the real world numbers, it would be hard to find a single person that would think this economy is not in a recession already. So once again, I make the case that when the NBER goes back, they are likely going to announce that we entered a recession sometime between July, August, September of this year. But just like we saw in 2008, they did not officially declare a recession until a full 12 months after the fact. I expect this time to be no different, and I have been continuing to make the case that whilst I am long and strong across the board, whilst I continue to look to add more longs this week, I still think when we look really hard and close at the data, what we find is that we are right around that neighborhood to see recessions already. And I completely understand that people are sick to death of recession callers. I completely understand that because they've been flat wrong for about 2 years now. But notice how right as we're approaching third and final angles, right as we are approaching the parabolic tops of these longer multi-decade cycles, we've also got every man and his dog saying, no way we're going to get a recession, soft landing is the base case. 90% of the analysts on the street also have no landing or soft landing as their base case. And the biggest part of all is this actually fits perfectly into the narrative of tell that to the bond market, right? And the Fed is behind the curve even after the 50 basis point cut. They're still over 100 basis points behind the curve relative to the yields on the treasuries. And the Fed is going to have to start to cut rates hard and in a hurry to get back to neutral because this unemployment continues to deteriorate. We are also likely going to get a lower CPI print come in this week, which will further confirm the Fed is already far too late to cut. And that's when we start to get things like panic cutting. That's when we start to see 50s, 75s. Remember, they were super aggressive on the way up. It would only be a law of nature and balance and reversion to the mean to see them be very aggressive on the way down as well. And again, it does not mean we cannot be screaming higher in the short to medium term. But under the hood, I think when we go back, we are going to be able to look back in this period in time and say, you know what, this all made an awful lot of sense, at least for the people that are willing to look slightly further beyond the 4.1% that was reported. So again, I'm not trying to sell you anything. I'm just pointing at stuff and saying, this is how I see it. You can take it or leave it. But for me, at least, the higher we go, the more twitchy I start to get. And I see no sign of improvement in the macro data just yet. Over in the world of Bitcoin, we saw Metaplanet buy another 1 billion yen in Bitcoin, and fitting in with this theme of just maybe take on board what I'm saying, just consider it, even if you don't buy into it, even if you want to discard it afterwards. This tweet here from Bobby is absolutely excellent. Market participants expect these cycles to play out precisely as they have in the past, and this is a huge mistake, and in my opinion, a sign of a novice investor. If every cycle were to play out just as its predecessor, everyone would be rich, there would be no market. It's important to understand that history rhymes, but every cycle is different. And if you think about it, all you need to do is open your eyes and look at the chart, okay? The first cycle, we got a double pump. The second cycle, we got a big parabolic curve. The third cycle, we got some kind of expanded flat with 2 distributive tops. And this time around, okay, for the cycle theorists, it actually makes perfect sense to see this cycle top a lot sooner than most people are anticipating. It makes sense to see a top come in this year or perhaps as late as Q1 of next year. Having convinced absolutely every man and his dog, nothing is different this time. It's going to run all the way into September or October of next year, just like it always does, because again, nothing is different, but there are always subtle differences between cycles. And as Bobby points out here, if it wasn't, it would be so easy, right? It would be too easy and there wouldn't even be a market. Everyone would be making 2 trades, one at the lows and one at the highs, and that's it, right? So I point at this simply to illustrate the importance of staying open to all possible outcomes. And for me, my base case is still that this cycle is going to top sooner than most people expect and is therefore going to have to spend significantly more than that 12 months in a bear market decline. When we come back and look at this in hindsight, I think it's going to be really obvious because we would have had 3 right translations for Bitcoin, followed by a left or at least a mid or a slightly right translated, okay, and then an extended bear market decline. That's also how the Elliott wave system predicts it to go, with a big ABC in here. And then by the time we get down here, we'll be able to look back with hindsight and say, well, yeah, of course, right? Double pump, parabolic expansion, distributive, expanded flat type deal, and then one that topped much, much earlier and had an extended bear market to correct the whole super cycle move before we can do the whole thing all over again. So again, okay, just put it on the back burner, stay open to all possible outcomes. Otherwise, there's a good chance that you can get blindsided. So I've said quite a lot for a Monday morning, but I think from here, we should be in easy mode. That's assuming you've got enough attention span to stick around here and I haven't bored you to death. But take a look at MicroStrategy, okay? Is this front running what's coming for Bitcoin? Is this going to be a marker, a hint, a tell from the market that we're about to see Bitcoin rip to new highs? Because MicroStrategy is not very far. We're talking something like 10% away from printing a fresh, brand new all-time high, which to me kind of says somebody on the inside is expecting to see a face-melting pump out of Bitcoin pretty soon. So I can see myself getting long MicroStrategy today. If you're a level 3 member, keep an eye out for the notification on that with the exact levels. And sometimes keeping it as simple as possible can actually have the best results, okay? Could it be this simple, okay? Bounce, off we went, bounce, off we went, bounce. Are we about to go well above 100k now? Is it as simple as that? Are we about to see this big, huge extension, something akin to this that lasts about 12, I don't know, maybe slightly more weeks? And for this, I wanted to point at this for a simple reason, okay? I want you to completely ignore all of the pricing here, okay? I don't want you to pay any attention to that. And I just want you to use your eyeball to look at this whole move right here, okay? And ask yourself the question, does this look insane to you? Does it look impossible? Because from my eye, if it was to do something like this, okay, that would just look completely normal and healthy. That does not look like an extreme move, at least based on my eyeball. And that would put us somewhere around 150k. And Bitcoin can and does do Bitcoin things sometimes. And I would not at all be surprised if we did something like this and then had an extreme pop into this huge euphoric peak. And just based on my eyeball alone, that to me doesn't seem completely out of the question. That seems like we're just extrapolating this move and adding it to here. To me, like I said a million times, I don't think that's insane. I also think when we zoom out, okay, it will have all the familiar symptoms of a 3-angle blow off top, similar to what we're seeing in the stock market. And I think an awful lot of people don't want to believe this is on the table, frankly, because they probably bought here, sold here, and have now been hoping and praying they're going to get 30 or 40k to buy. But I'm just not convinced that's coming. I think if anything, on balance of probabilities, something akin to this, and even if it only, quote, only gets to 150k, I still think that would be pretty good performance. And again, just based on my eyeball, getting to this kind of level here doesn't seem like moon boy talk to me. And so the last thing to point out, okay, is we saw some pretty strong looking closes going into Friday. And I said it's pretty binary from here, right? If Monday is red, then we look for an undercut of those lows, a swing, and we get long straight out of that swing. And if Monday is green, then we can say the cycle low's in and it's time to add some longs. It really is as simple as that. So encouraging look for the S&P 500. If I flip this onto the US 500, note the subtle tell here, okay? So far, that is a lower high, and this could well be the making of 2 drives. Something like this, and then that would be me long out of here with a stop below the low, adding and moving the original stop loss up to here. And as I said in the other tweet, if we're just going to turn around from here and print a new high, then we'll say, okay, cycle lows in, happy days, and we'll get long in here with a stop below the cycle low as always. So it is actually nice and simple so far. Similar deal for the NASDAQ, right? This could well be 1, 2 drives, swing and go. Or if this thing is just going to blast off today, then again, we'll get long, we'll confirm the cycle low, we'll put a stop below the low as always, and happy days, we'll take it from there. The exact same is true of the Dow, okay? So again, looks pretty bullish, right? Looks like it wants higher, but it could always be 1, 2 and go, and that would be far more typical than just having one of these shallow cycle low pullbacks. But it is actually my preferred look to see those 2 drives patterns, because number 1, that would just look a little bit more like a cycle low, and number 2, it'd be easier to identify. So hoping that's what we get, ready in case we don't. Exactly the same is actually true of gold right now as well, okay? So it's entirely possible we forced an early cycle low here and we're about to kind of chop and move higher. If so, we'll get long, but my preferred look is that this is in the making of 2 drives. Again, that would be far more typical for gold. It would give us a bit more of a flush to reset the sentiment, and then it would give us an easy to identify cycle low. Either way, hoping for an undercut, similarly to the stock market, and on guard in case we get a push and we can put the stop below the low as always. And for Bitcoin, okay, is that it? Did we just find the low over the weekend? Did we just force a day 27 half cycle low, and are we now getting ready to blast off? I was thinking we would maybe get an ABC in here. If this really is a half cycle low, like I suspect it is, then we kind of held that yellow squiggle level that was looking right to my eyeball. So we'll see, right? If we do start to fire off from here, then we can say for sure this was inverted, that was a half cycle low, and that tells us to expect some kind of breakout retest into the next cycle low and resumption. And if what we get from here is a failure, lower high, okay, something like this, and a rollover and an undercut, then we can say this probably wasn't inverted, and this was probably more likely a 60-day cycle low getting ready to go again. The scenario I see an awful lot of people calling for, I keep saying the same things over and over again, I'm bored of my own voice, right, is a plunge down here to new lows and then bull market straight to 150k. To be honest, the cycles just don't agree with that. That just wouldn't make any sense from a cycle trader's perspective. Now, I know I'm not the only guy with a system, and I'm by no means claiming to be right all the time, okay? Each of us have our own systems and our own opinions and our own experience, and we do what we can to stay on the right side of the trade. But to me, from a cycle trader's perspective, a move that does this to new lows and then fires off to all-time highs is just not something I would ever expect to see, really. If anything, we get flushed down to here, and I would be thinking, this is what comes next, from a cycle perspective. So, as ever, we'll keep taking it one day at a time, encouraging ideas so far. As I said, push off from here, and we can say for sure this is a half cycle low and this is inverted, get one kind of final undercut down to support or something on the red line, and I think then we can talk about not having an inversion and instead having a 60-day cycle low in here. But so far, so good, right? Yellow squiggles remain undefeated for now at least. Oh, and I almost forgot, 2007 fractal, okay, suggests a day 46 cycle low, which would be Wednesday this week. But we get a Wednesday this week cycle low, we get a day 46 cycle low, and we are struggling to be able to rule this out. Now, don't get me wrong, I really want to discount this in the first instance. The moment I can invalidate the 2007 distribution and top and breakdown and bear market, the moment I can invalidate that by seeing a higher high and a cycle low, then I will do. And I can't wait to scratch this off and say, okay, we're not doing that. We're in a third angle, blow off tops are coming, right? Nobody wants that more than me, believe me. I really don't want to have to deal with this. But something to keep an eye on is if we still haven't found a low until about Thursday, and then we get a swing and a lower high, then we are absolutely repeating 2007 to the tick. And what came next was a bear market. That would be the ultimate high. That would be the top. And we should expect to start to see these trend lines getting broken down. And I would be looking for shorts here as well. So, like I said, let's be really clear. Nobody wants to invalidate this idea more than me. Nobody wants to just delete this thing and move away from it and say happy days, long and strong, adding to positions, blow off top angles more than me. Okay, I want that more than anyone. But at the same time, I'm not one of these people that just says 100% we're going up. Okay, F the bears, F everyone else. Okay, I don't care what anyone's opinion is. That's not my style. Okay, I'm remaining open to this because so far this is still very much on the table. So we need to invalidate this by finding a swing this week, early this week, and set at a new higher high, and then we can breathe the sigh of relief. But if we don't find a cycle low until day 46, okay, which would be about Thursday, and then we get a lower high bounce out of there, then the Camel Crew are going to at least be able to be ready for that situation, whereas I think a lot of other people are not going to be ready for that. I also think if this is what's coming, and I'm not saying it is, remember, I'm looking to invalidate it as soon as possible, but if this is on the table, if this is going to play out, then what's going to happen to Bitcoin? Right? Is Bitcoin going to decouple and break to all-time highs in the face of the stock market melting down? Or is Bitcoin going to do what it's always done when the stock market breaks down and crash with the stock market? If I had to guess, if I had to bet on one of those, I would suggest that Bitcoin probably gets smoked along with the stock market. So again, nobody wants this thing to invalidate more than me. But as you can see, okay, until we find a cycle low and a new high, then I have to leave this on the table. So it's going to be an interesting week. Last couple of weeks been quite quiet because we were waiting for those cycle lows to show up. But they're now here. We are back sitting in the hot seat, hunting those cycle lows, getting some longs on. If you're a level 3 member, look out for the notifications because I suspect there'll be a few trades this week. But everyone else, welcome to the week. Welcome to Monday. I hope you're doing well in life. And until next time, take care. Cheers. Bye.
Camel Finance, he's the man to see. Rocking the markets with his contrarian spree. Trades like a pro, no fear, no shame. Sticking to his guns in his money game. He's a badass, oh yes indeed. Camel Finance got the markets key. Taking us stormies on a bump.